Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday. Let's take a look at some charts, starting with the flows report from James at CoinShares. They've switched it up, gone to the line graph. We did have 785 million weekly flows. Most of that, again, coming from IBIT. Probably the basis trade, partially. We'll take a look at that. I don't think we're fully bullish until all of the ETFs are gathering assets. Maybe that's incorrect, but that's how I feel. See BTC and ETH getting the lion's share last week and everything else just kind of limping along. Not much to really speak of. Short Bitcoin up a little bit last week. And of course, it's all about the US. So if we can broaden out the flows here from the US, from BlackRock, which is going to be hard to do, then that's a good sign that we are more bullish. If we can breach all-time highs, then I'd imagine we would see that. This is the 30-day cumulative flows for BTC. Strongly positive here after Liberation Day. Doesn't tell the whole story because, again, if we look at the basis trade, the idea that you can short the future, buy spot, be net neutral, capture this ARB, 8%, probably still decent. I don't really know what function these ARB shops are looking at to determine where the basis trade is good versus where it's not, but we are seeing futures open interest pick up quite a bit, futures volumes declining. I don't think any of this is necessarily bearish or bullish, but it's just something to keep in mind when we're looking at the flows. And this isn't just people who are net long, right? This is people who are doing other things besides just buying spot and hoping price goes up. Looking at the old BTC on Kraken Pro, quite the volatile past 12 hours here at what is essentially all-time highs. I mean, we are sitting just below the all-time high of 109. It would still make sense to me if we consolidate a little bit. Not that we need to do that. I would feel more confident on a breakout if we consolidated for a little bit. There's a Williams fractal stop loss at 101.5. We did have a Williams fractal breach yesterday at 105.6. So everything is clearly bullish here. You got your trailing stop loss right there. Hopefully you didn't open a fresh position just yesterday, but it's still triggering and firing go long signals up here. My worry is we have a TKC clamp, so we're clearly overbought. We've got a bear div on RSI now. Funding still looks fine on the crypto side, but we're clearly fighting somebody or something. Something is out there trying to keep us down. This is it's pretty crazy moves here in short order, up and down. Low time frames. There was concern for, just look at this on the 4 hour. There was concern for some sort of head and shoulders diamond thing. And anytime I see any bearish pattern, I don't care if it looks completely garbage. I just take pause. I say, okay, that's a yellow light. You don't necessarily have to do anything. I'd keep your trailing stop losses where they are. See what happens. Go from there. Wait and see. We broke up, broke back, broke down, broke all over the place, right? So we're trying to figure out what this is going to be on the 4 hour. You certainly feel better about this if we can hold 103. But again, the daily is crystal clear, 101. That's a trailing stop loss. If that is wrong or ends up being wrong, that's okay. But your downside here would probably be, I'd assume, 94. If we turn on VPVR here, which you can access on Kraken Pro using the link in the description of this video, 97 looks like the high volume level. So probably nothing too far below that. If we do try to reach, it would be 92. That would be the cloud level. That would be the key June. If we turn on pivots here, no immediate pivots on the yearly that are close. The 20-week moving average is also at 93. So I'd imagine previous order block 93 to 97 would be where we reach if we can't hold 101. So again, no immediate concerns here. It's just something to keep in mind if we start to look weak for whatever reason. We did have a spike in yields on Sunday that helped push us lower. We have fought that off on the legacy side so far. Not really much going on this week on the calendar. A bunch of Fed speak, just an infinite amount of Fed speak. PMI, sure, Fed speak. Next week is Memorial Day. Markets closed on Monday. And then we've got GDP revisions, and PCE is going to be the big number to watch next week. Like I keep saying, I don't think the Fed cares about anything other than unemployment. They're not going to move rates until they see a spike in unemployment. So I think this is correctly priced right now. They're not going to move before. They're going to move after. So if we see an unemployment print that's moving towards 5%, then they cut. Otherwise, they stay put. There's no soft data print that's going to make them move. I just don't think so. You can talk about anything you want. U6 unemployment claims, continuing, new, whatever, right? There's all sorts of stuff that people love to bring up, but they're not going to move until the unemployment rate moves. Largely because we're starting to see even trueflation creep up a little bit back to 2%. Now, 2% is the Fed's target, admittedly, but trueflation will move both up and down, kind of beta to CPI a little bit. It's not really CPI, it's a different calculation. It's a real-time inflation index. They try to get it as close to CPI as they can. That makes sense, but there's going to be a lagging housing component in CPI. So this gives all the more reason for the Fed to just do nothing if inflation is on the rise again. Looking at gas prices, really they haven't gone anywhere over the past year. Oil's at 61, and that nothing's going to move here until oil starts to creep up again. But over the past 3 years, past 4 years, this is a great price for gas. And go ahead and inflation adjust that and tell me what the price should be and what it is today. So that still looks great. This is the problematic one. Fertilizer, again, it's like one input. If I'm looking for stuff to be doomer about based on inflation, seeing food costs rise because somebody has to pay this somewhere, just like tariffs. Somebody's going to pay that somewhere, whether that's going to be the consumer or the supplier or whatever. It's going to work its way into the food costs. So this would be at the level peak in 2012 and close to the peak in 2008. This is just the new norm, right? Post-COVID norms. But to see this rising along with trueflation, not something you want to see if you expect inflation to quiet down. The used vehicle index, which had a bunch of press because everybody expected all these automotive tariffs, hasn't really risen substantially. You can sort of draw an imaginary pre-COVID expected line, and we're close to that. We're still above the norm, but we're not screaming like we were immediately after COVID. But this is another one to watch as an input into CPI, into PCE. The Fed's own estimates for PCE, fairly benign. And of course, the doomers are going to point to this and they're going to say it's still not at 2%. Fine. Whatever helps you sleep at night. We're well on our way there. The argument from the hawks is that the Fed won't cut until they see 3 to 6 months of 2% prints with the 2 handle 2.0. So until then, fine, right? Risk assets so far, doing well. You're certainly hurting borrowers by not lowering. And savers are thanking you because ideally they are beating inflation, at least on the short end. GDP estimates continue to come through since the last print, and we are well above 2%. So it's unlikely that we see a quarter over quarter negative print here again. This could change dramatically with whatever data is coming down the pipe in the future, but I think the tariff event, at least for the moment, is behind us. So if we get another Liberation Day 2.0, then maybe we get another weird import-export dynamic that pushes GDP lower. But for now, so far so good. Trump's big, beautiful tax bill wants to add a bunch of debt. Doge hasn't really cut that much. So we're back to status quo, really. Not much has changed. On the liquidity front, reverse repo still hanging in there at around 100 to 150 billion. Once this shrinks, this is another thing to watch for relative to QT versus QE. If this shrinks to zero and there's liquidity problems, then the Fed is going to step in, but not a moment sooner. Not a moment sooner. So far so good on that front. For BTC and global liquidity, this is the Global Liquidity Index is what it's called on TradingView with a 75-day offset. We look fine. This is how it looked in 24. It is what it is. Make it a 50-day offset, make it a 150-day offset. I don't care. It doesn't matter to me. Number go up. Nothing stops this train. And unless global liquidity makes a lower low, I wouldn't expect anything different here. And this looks like, just looking at this, easily we reach for all-time highs and beyond. How much further beyond is the question. Now, if global liquidity jumps to 142 plus on the index, then I think we're a shoo-in for like 120. But that's a wait and see. So we're getting in the wheelhouse of where liquidity has stalled up here. But so far so good. Certainly not bearish. Certainly not. What is bearish is things like the long bond, TLT, as yield uncertainty and just tick, 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 yields moving up. Certainly not bullish for TLT. Just trading this on technicals is not bullish either. I mean, it's just black and white, right? You're either above or below, and you're below. All right, you're bearish. Why you'd want to buy this or sit in this is beyond me. This is like buying a falling knife on an altcoin. It just doesn't make any sense. There's plenty of head and shoulders fractals here, by the way. Now, previously there was a decent case for an inverted head and shoulders, and we just, boop, just plopped down below the cloud. Okay, it is what it is. If I didn't tell you this was the 30-year yield, you'd say, wow, where can I trade that? That chart looks so good. This chart has a multi-year consolidation that it's looking to break out from. So this is something just like we saw over the weekend for Bitcoin and alts to pay attention to. If yields get crazy, like way above 5%, then we may see some pain. But the assumption is they will have to step in somewhere. So where is that somewhere? You can either just say, I know that they are going to eventually do something like yield curve control. I'm just going to eat it and hope for the best. Or you can take some acceleration out of the gas pedal if things look bearish for risk assets and then wait for the intervention. Most people should just do nothing, right? They shouldn't be trading this, but just something to keep in mind. If rates get angry in the short term, that's going to hurt risk assets. And the longer rates remain high or higher or rising, it's certainly going to hit states specifically disproportionately. This is credit card debt to income. You can see in the South, Northwest, this is of course across all income levels, but certain people will get hit harder, obviously. And you're seeing a lot of soft data that's troublesome with delinquencies. Okay, fine. I'm not going to disagree. But that isn't the market, right? And that isn't the Fed. The Fed cares about very specific things. Now they may take delinquencies under advisement and acknowledge that there's some issues there, but it doesn't look like the borrowers are going to see a reprieve from these rates anytime super soon. This is a dollar. Dollar in crypto explodes higher territory. Why isn't it listening? Why hasn't crypto exploded higher? It's trying to. It's trying to. Now, if the dollar, for whatever reason, fails to break higher, which I think is the general assumption here, we'll see what the tax bill does. You know, watch these big events politically and see what moves the needle. Does the tax bill pass? And if it passes, what happens to rates, yields? What happens to the dollar? Do the bond vigilantes show up? But if the dollar continues to look weak, again, you'd expect BTC to easily break all-time highs because that's going to push global liquidity higher. But you don't want to see yields angry. Certainly don't want to see that. Maybe into Q3, we see some sort of like edge to edge here on DXY, and that's when we get a pullback in crypto. We'll see. But so far, so good on DXY. And Legacy just doesn't care. I mean, look at how strong this is. We closed down on, or opened down on the day, like 1% overnight, people flipping out, all the Doomer Twitter accounts posting all the indices red. And here we are, back up on the day. We look fine. Now we're screaming on the daily cloud. Just look at the rate of change, right? Between pre-2025 and post looks a lot different. This is all hunky-dory. We're fine. Everything's fine. And then, you know, a meteor hits and we've recovered. I still think it's going to be difficult to break all-time highs before some sort of reconsolidation here. This is just a huge swing in the SPY super quickly. The Qs are the same. Now the Qs, like the SPY, you can measure, call this an inverted head and shoulders or something. This easily measures all-time highs. It's just a question of when. It certainly seems that many people are locked out of this because of sentiment and positioning, that they were not expecting this to move this positive this quickly. And that may be why dips are getting bought up so ferociously, because people are caught off sides on the indices here. It's the Mag 7, same deal. Looks great. You know, maybe we consolidate between 52 and 55 here. Maybe it pulls back to 49. I don't know. It still looks way more bullish than it did immediately after breaking down here in the 40s, right? It looks great. It recovered everything. The preference here is a bullish TK recross closer to the cloud level. You know, this speed is certainly preferred. This is hard for the cloud to interpret because it happens so quickly, but it's clearly above the cloud. It just gives you this entry pretty late at this point. SMH looks the same. You know, all these charts sort of look the same. They're all the same denominations of various Mag 7, but SMH certainly looks like it needs to cool off for a minute here at 245. IWM is another one that I wouldn't expect small caps to do well in the current environment, but the chart looks good. chart looks really good. Now, if you get a right shoulder and then you get a break later on this month or into July, then the chart looks even better to me because then you'll have the cloud fully on your side. And this isn't one that I actively trade, but from a setup perspective, something to consider. If this can get back down to say 203, maybe that's a decent area to think about. But even IWM looks great. Here's the Dow, DJI, looks phenomenal, right? This made another high today. What here is bearish? Nothing. So this is also helping BTC, obviously, with Legacy just not caring about yields and just rallying through the downgrade from Friday. So all these indices look really, really good. XLU, which I keep talking about, looks great. I certainly like XLU over XLE. XLE's energy. This thing just looks stuck in the mud, failing to do anything, whereas XLU looks a lot stronger to me. Even XLF financials bounced all the way. It hit the measured move on the cloud almost. It hit the measured move of the pattern, and then we're right back up here at 52. Wild how quickly that changed, but it's certainly not bearish. One last chart I'll discuss here is HIMS. This account bubbled up on Twitter. It's interesting that MSTR is not on this chart, but if you're a volatility junkie, maybe you like trading stuff like this. Pretty crazy rising broadening wedge. Rarely do you see that. Obviously, it's way late to do anything here trading-wise, but just interesting. Kind of like Netflix, where it just continues its move higher. So broadly, things look okay. BTC looks fine, right? It's oddly calm up here at all-time highs. Legacy looks okay. So we get a pullback, so we don't. I still don't like max leverage up here. But to break all-time highs this week or next week, I don't think would be out of the question. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.